What is CBDC? No, not CBD. Central Bank Digital Currency. Yes, it's a mouthful, but it's something important you should know about as it may change the way we use fiat currencies. In this video, we're going to find out the goals of CBDC, the difference between CBDC and crypto, as well as the issues it may solve and create. All right, let's get into it. So a central bank digital currency, or CBDC, is a digital form of a country's fiat currency. It is similar to cryptocurrency, except that it's issued by a central bank, and it may not necessarily be on the blockchain. But you might be wondering, how does CBDC differ from the money in my bank account? Well, the money in your bank is typically not legal tender. Rather, it's a promise of the bank to provide you with the physical cash, which is legal tender, upon your request. Usually, banks do keep their promise. But if you keep your money in the bank and something happens to the bank, like bankruptcy, the promise breaks and you would effectively lose all your money. On the other hand, CBDC is legal tender and you won't be at risk when banks fail. So why are governments considering creating a central bank digital currency? Well, CBDCs could potentially promote financial inclusion, protection against fraud, and accelerate the transition to a cashless society, which has been made even more desirable due to the COVID-19 pandemic. Now, these goals are motivated by the problems in the current financial system, which CBDC aims to solve. So let's go over some of these problems. Okay, problem number one, bank failures. As it is legal tender, CBDC eliminates the third-party risk of events like bank runs. And if there is any remaining risk, the central banks are the ones held accountable. Then, problem number two, high cross-border transaction costs. When transferring money to someone in another country, you would typically be charged a high transaction fee. But with CBDC, the cost can be lowered as governments would increase their jurisdictional cooperation to make the distribution system less complicated. Problem number three, the unbanked. CBDCs would be more accessible to the unbanked as the typical banking requirements just won't apply. To access the digital money, you would only need an app on your mobile phone. Problem number four, expensive financial infrastructure. CBDCs can establish a direct connection between consumers and central banks, and as such, this could eliminate the cost of building financial infrastructure. While these problems may be solved, CBDCs could also potentially create other problems, mainly that the effects on a financial system's stability are still unknown. For example, there may not be enough central bank liquidity to facilitate withdrawals during a financial crisis. Central banks will need to ensure that they have the tools to positively influence the economy. Due to its centralized nature, CBDCs would not offer the same kind of privacy that cryptocurrencies do. Authorities would be needed to monitor for financial crimes such as money laundering and the financing of terrorism. And furthermore, CBDC would be vulnerable to an even larger surface of attack as they have not overcome issues like setbacks in operating technology or exchange security failure. Yes, cryptocurrencies have gone through some notable cyber threats, such as the 51% attacks on blockchains. But these attacks are proof that blockchains are battle-tested. What's more, central banks are still struggling with protections for their current paper currency, which has been going on for centuries. Rival states and financially motivated hackers have reportedly found centralized points of failure within central banks. The bottom line is that while the potential benefits of CBDCs seem attractive, we still don't know how they would affect the economy. So this is why many countries are still investigating the technical and economic feasibility of digital money. So far, there are 9 countries and territories that have launched CBDCs, and 14 countries are in the pilot stage. But without new standards and international coordination, the financial system may face a significant interoperability problem in the future. So what do you think? Would CBDC be the next evolution of the financial system? Well, we'd love to hear your thoughts, so comment down below, and of course, don't forget to like, subscribe, and hit the notification bell for more videos like this. See you next time.